Hey everyone, it's Al Labarola for Financial Intelligence Training. It is Wednesday, it is October 24th, and it is 2018. We are 1 week away from Halloween, but I think the markets have already started to spook everyone a bit early. What a wild ride we had yesterday, to say the least. I'll tell you one person that didn't care about it though, and that one person is from South Carolina and is a whopping $1.6 billion richer today. So congrats and good luck to whomever they are. Now the Red Sox, they took game 1 last night at Fenway, and I think this is going to be a very interesting series, especially if the Blue can take game 2 tonight. Now back to the market. How is it that everyone keeps calling for a correction to be over? I'm just not understanding how they can pick a bottom right here. For starters, the news that lifted the markets came from the White House yesterday on some chatter on resumed trade talks. Yeah, I'm sure that seems to be on both of the president's minds, seeing as how both of our markets are getting clocked. But let's identify some key breakdowns so you can better understand the woes that we face in the markets right now. Now, in the first week of October, as the Dow was hitting all-time highs, the advanced decline line was telling a very different story. Now, the 52-week lows were outstripping the 52-week highs. Now, you can look at that as a glass half full mindset and say that when those stocks get their act in gear, well, then the market's really going to run higher. Or you can look at it from the angle that if the ones that were doing the heavy lifting got tired, well, then the tug of war would end very quickly. And that is exactly what happened, as evidenced in the 1,500-point Dow slide. Now, if you follow me on Twitter, you'll see my weekend tweet on 10/14 about the price action on the close of business 10/12 in the S&P 500. I took a screen cap of someone that tweeted suggesting that the market was similar to the February drop. Well, I called malarkey, because financial intelligence training students know just how important the financials, the transports, and the semis are to spotting weakness in the market. Well, all three of these areas had and have real weakness. I suggest that right now, the market, it's like swimming with an anchor fastened around its waist. It's really easy to sink, but very hard to stay afloat. Today, that weakness persists. And I'm telling you here and now, until that changes, the market's going to have a real struggle to have any meaningful move higher. But it's not going to take very much to sink it at all. So what do you do in times like this? Well, you need to prepare and adjust. It's like a tsunami warning. You take to more protective ground. If that warning proves to be nothing more than a warning, well, then you happily go right back home, right? However, what you don't want to do is sit by the bay with your umbrella drink in hand, hoping for the best and suggesting that no tsunami is going to come for certain. That's not really a great strategy. Well, right now, it's time to be smart with your allocations and the rest of your financial plan. You got to remember that correlation kills diversification. And correlation is most present in the darkest hours of the market. So look to your portfolio, assess your correlation risk currently with this pocket of volatility, and try to figure out what will happen if that continues to move down. How will that impair your portfolio, and what will you be doing about it? And if you're trading any of this volatility, then you got to remember that stock and stock options does involve a substantial degree of risk. It's not suitable for all investors. If you're looking at charts, as I suggest you do, well, please remember that past performance is not necessarily indicative of future results. I'm Al Labarola for Financial Intelligence Training. Thanks for watching, everyone.